Hello, everyone. Welcome to our April 2024 webinar. It is the Founder Roundtable. We have some of the top CEOs in regulated crowdfunding, individuals who have raised more than virtually any other issuer on today's discussion. So it's something I've been looking forward to. I get asked daily, what are the key factors to success for an investment crowdfunding? What are the best ways to raise money online? And rather than me on the marketing side, trying to talk about different angles or point towards what's worked in the past, you're going to hear it firsthand in today's Founder Roundtable. I am joined here by the CEOs of Avadain, Atombeam, the BuildClub, and Sircles. I'm going to let them hop directly into introductions versus just me and my perspectives on how great they are. But you're going to be able to hear details that are not available elsewhere online. This is beyond a basic 101 discussion. So Stephen Forte, founder of the BuildClub, you want to introduce yourself to the audience and we can hand it off before getting into the questions.
You betcha. Hey, so I founded this company, BuildClub, a few years back. We're focusing on bringing AI and big data to the building materials space. It's been a super opaque space forever, right? You go try and buy things, you don't know if the price you're getting is good, you don't know who has what inventory. We're changing all of that. And it's just a space that frankly bugged me for a long, long time. And like many of the other founders here, I run big companies, small companies, and many patents, public companies, but found this to be the most interesting and dynamic thing I've done. And the crowdfunding piece, frankly, has really surprised me. We'll talk a bit about that and how interesting it's been.
All right. Me? So I'm Charles
Charles
Yeomans.
from Atombeam.
All right, thanks. So I'm Charles Yeomans. I'm the CEO of Atombeam. Atombeam is a company that has like basically a completely new way of dealing with data. I mean, at a basic bit level. And it makes it really hard to explain a lot of times. And so, but the effect of it is to make data way more efficient. And it's a big issue because the amount of data is ramping so fast that networks are, getting too taxed and there's too much floating around, and it's very hard to deal with once you've stored it and all that. And so we address this whole thing. And fundamentally, the first thing we're doing is addressing the people that have to push a lot more data through a given pipe, because we can put about 4 times more data through the same pipe that anybody else can. And that alone is a pretty big deal, but it's one of the manifestations of this sort of rethink of data to make it a lot more efficient. So do you want us to give a little background of ourselves too? Is that now or wait?
That would be fantastic.
Oh, okay. So I too found crowdfunding to be really an interesting, different, never really thought about it before kind of thing. We've raised about $8.5 million over 3 raises since 21. We have my background was I have an MBA. I worked on Wall Street for a while, did IPOs, did other kinds of capital raise stuff, and then got into entrepreneurship after that. And it's been a fascinating ride. And I was looking for money for Atombeam a few years ago, and one of my advisors said, you should really look into this crowdfunding thing. I go, what? That's for like guys who do things that are, like they sell beer and they want more customers to buy their beer, and they also raise money and so forth. And that doesn't really, instead of some esoteric deep tech thing like we have, it's not typical. However, it's all in the communication and it's all in the engagement. And so we can get into that a little more, but for me, that's been the cornerstone of being able to really make this work. And I like it. I like the idea of democratization of capital. I like the idea of having more, just more people participate and get the chance to participate in stuff that's been limited to kind of, an elite
Totally.
group of guys and stuff.
Yeah. And I want to get back into that. Want to do the intro for John Worthington, CEO of Sircles, has one of the top live campaigns at the moment and past raises as well. And let's get back to why equity crowdfunding. But John, share with the audience who you are.
Hi, Jason. Hi, everybody. Thank you. Yeah, I'm John Worthington. I'm co-founder, CEO of Sircles, spelled with an S, so it's Sircles. We're basically an app taking on Yelp. I own a small business in Northern California, Nevada, several locations, and we've been bullied quite a bit by Yelp, as many small businesses have. Our app is just recommendations from people you know. There's no reviews, so there's nothing negative. So our app's all about positivity, which is obviously totally different than Yelp, where 70% of their reviews are negative. We're not about reviews, we're about recommending. So if I want a recommendation of a good restaurant downtown, I ask my friend, what are some restaurants you love? I don't ask him 3 restaurants he hates, and so this goes all the way to anything you think of, from a dentist to movies and shows and anything you might recommend. So we started this app a few years ago. We've raised over 5 million through crowdfunding. We're in our 3rd raise, and I think we're one of the top performing on WeFunder currently. We just got a couple of days left. It's really exciting. We're really busy, but I'm happy to be here today and discuss crowdfunding.
Excellent, excellent. And Charles was making some great points on early perspectives on investment crowdfunding, equity crowdfunding. I was told back in 2016 that that's only for groups that can't raise money offline. Where Charles is stating, hey, raised billions offline, investment banking, venture capital. I understand all of this. Why did you guys choose this vehicle over other funding options? I imagine you can make a few phone calls, get in touch with a few different groups, introductions, and close rounds. What stood out to you about equity crowdfunding early on, and how have you seen that mature throughout your endeavors?
Jason, it's been an interesting path watching that, because, everyone thinks of crowdfunding being like Indiegogo, right? Someone's selling some plastic widget and you can buy it in advance and do that. And it took some time for this market to evolve in terms of equity raise. And frankly, surprised the hell out of me. I think we were looking for a way to democratize the investment, build community. In our case, it's about the small contractors who are, our target audience, of which there are a gazillion of in the US, and no one pays attention to these folks. And we wanted them to be able to participate in our success and really be part of that. And I think some of the surprises along the way were, and I talked to Charles even before I launched my campaign, because he was a veteran by the time I just got started and I hadn't done it before, was simply that you're really, selling a different product. Now, I know we're really talking to founders in this, in this webinar. So it's really, you are selling a different product. There's a whole lot of things to think about. There's a group of vendors that need to get done, but it really is a different method. And I think one of the true advantages are that it's something, if you get it right, can be ongoing. You can kind of lean further into it. You can keep it running, which is very different than, say, a VC. The only flip side I'll say is that if your business model requires a big slug of cash, a $5, $10, $15 million infusion in the beginning to build a team and grow, it's probably not the right thing for you, because it doesn't come in that way, right? It's not like a VC closing, there's your check, go to it, guys. It's really quite different.
But once you crack the code, you could keep leaning into it. Brad Larschan, CEO of Avadain. We haven't had a chance to hear your introduction yet, and just started talking about why equity crowdfunding. I know you've run multiple rounds and have shared with us different notes on why this vehicle is so powerful. Could we start with your introduction and lead into that question as well on your selection process?
Sure, absolutely. Thanks, Jason. And apologies to everyone. I was on a plane that was delayed. And so I just got off the plane, jumped into the Sky Club, and here I am, late, but here nevertheless. So thanks for inviting me, Jason, to this. It's great to be here with you and these other great founders. So I'm the CEO of Avadain. We have a technology that we believe can disrupt the creation or enhancement of thousands of products. And we started this in 2016. It's been a long road of development, but we're finally at the point where we can be having products in the that is flakes, graphene flakes, to be used in products in the market in the not too distant future. And so what drew me originally to crowdfunding was that we saw the potential profound impact of the technology that we were developing. And we were really not able to reach agreement with venture capitalists, even angel investors, on what our valuation would be. And we were convinced it was a lot more valuable than what they were willing to offer. So we tried crowdfunding just to see how it would work. And we used DNA as our marketing agency. We were on the Net Capital platform, and it worked extremely well for us. So not only were we able in our first round, which was in 2022, right as the economy was going into a recession, we were able to raise 1.36 million. But at the end of it, we were able to bring in angels and VCs at the valuation we had established through crowdfunding. And we really didn't, and unlike Stephen, we didn't think about what would come next. But it turned out that in 2023, we went back again for crowdfunding because we had a very good response the first time, and we had an even better response the second time. We were fully subscribed. We had to raise our cap 3 times. We originally wanted 3.6 million. We then thought, okay, we can hit 4.2, and then we thought we could hit 4.5, and then we stopped once we hit 4.5 with 277 investors trying to invest after we maxed out. So for us, crowdfunding gave us a credibility with the investment community that we otherwise wouldn't have had, and that has allowed us to not only bring in lots of small investors, but also big ones on the same funding terms.
Thanks for sharing that, Brad. It's been exciting to watch from each round to the next and how you engage your community and hearing about how it adds to the conversations offline. I think those are important notes. It's something we point to in our day-to-day conversations. I want to talk a bit more about strategy, but first, John, Sircles, engaging the community, making shareholder partnerships out of those individuals. Why did you choose to do equity crowdfunding? How's it been panning out for you on WeFunder across these rounds?
Yeah, great question. And it did take a little bit of deliberation from our team. And it's funny looking back on it, it's so obvious now. But of course, initially, it's like, is this a good idea? Should we do crowdfunding? What are the risk rewards? Obviously, now we feel really confident and glad we made the decision because our app is about community. You're sharing recommendations with friends. And of course, crowdfunding is really suited and tailored for a company like ours. I don't know that it would be as well suited for everybody, but especially if you are creating community around your product or your service or your invention, whatever the case may be, you can get a lot more network effect and word of mouth through the small investments. And of course, there's a lot more passion and dedication from the community when you build that community support. And for us, with an app that's about sharing recommendations of people and also we have a villain. Yelp is our villain, so that helps to rally people in a community around a cause. So those factors, I think, are major contributors to our success. And I would suggest to many similar type of ventures, if you have a similar kind of product or service where you can rally support and you feel like that energy can get momentum and more network effect, crowdfunding is really well suited for that. And as some of you said, it levels the playing field for the average investor to get in on things early that you couldn't have before. You used to have to basically have an in on Wall Street to get in on the good deals, but now there's a chance to get in on the next big thing before it's the next big thing.
So being able to set the terms, the valuation that you want, not losing control to VCs. I think in the pre-call it said you don't have to ask a VC to go to the bathroom. Being able to involve your users, bring on user owners, all firsthand, not just the tale of why crowdfunding, but you're seeing this come to fruition firsthand. Can you talk to us a bit?
Jason, I was just going to say a thing to consider on that as well is that, it's not only crowdfunding, so you're not limited to it. And I think some people think that once you choose that path, that's all you got.
Yeah,
so you can close other money, other rounds, other investors while you're doing it.
Yeah.
Simultaneous.
And you know, another quick point here, sorry to, I don't want to derail you here, but okay.
Please.
So,
Roundtable.
so what John was saying was like, look, I mean, I'm an example of a good industry to raise money through crowdfunding, but I think if you look at the diversity just of the group here, then, I mean, I'm probably even more of an outlier than most, but you know, at the same time, it does show that, you know, it's not limited to a certain set of industries. It's not only like consumer products or some sort of consumer facing thing, some kind of B2C kind of thing. Instead, it can be almost anything that's can be explained.
Totally.
That's what I'd say.
My intuition when I started this was that the companies like Brad and Charles have would never be like a crowdfunding company, and they've knocked it out of the park. So I think it's really all about the storytelling.
That's a great point. And I'd also add, I think we all would have the same opinion that it's not as easy as just starting any crowdfunding campaign and expecting I put up my shingle and I'm going to get investments. I have a great idea. Everyone's going to agree with me. So I'm going to raise $1 million. It illustrates here today that there are many different aspects in the industries that can be successful. But a really good point to remember is that you have to have the right messaging and the overall package. Starting a crowdfunding campaign by no way guarantees you're going to raise any money.
Absolutely. I get asked about cost of capital and, hey, well, are you going to give me a 10x return? They'll see case studies and say, when do we get those results? It's been said many times, if you build it, they will come does not apply to equity crowdfunding. And it's really you guys, the most proactive founders, have the most successful campaigns that make this all happen and push it all through.
Well, and I thought about quitting this a few times. I got frustrated looking at it. You know, you just keep kicking this ball and it's not rolling. How many of you guys thought about quitting? Any of you guys thought about pulling out in the first 6 weeks or somking? 10?
I was part of the conversations.
I mean, I don't know. It was probably down there somewhere, but you know, I have more of a fault of not quitting when I should than.
Yeah. I'm with Charles on that one. I just wanted to overcome the problem and just kept working at it. But I think what everyone is saying, Jason, is that you have to have a great story, of course, and you have to have something that you think will resonate with enough people that you can reach your funding goals. But it's all about hard work, and most of the hard work is really from the founder.
Tenacity.
Because each of the investors wants to have an insight into the founder, and that comes from multiple webcasts, publications, emails, outreach, everything you can possibly do to connect with this audience, and then to stay connected.
And that goes to the personality of the founder too. If you're not an engaging type, find somebody else who is to do this for you, because if you don't connect with your audience, then it's just like everything else on the freaking planet. You know, if you don't connect with your audience, forget it.
Yeah. There's a rhythm too.
Investing in you.
There's a rhythm to this thing too, and I'll have to say people hadn't thought about, but it's it's incessant, it's nonstop, right? So it's every week, and I've actually found that rhythm has added some benefit to the business, in a sense that when I'm thinking about what am I going to update on Start Engine this week, it forces you to distill your milestones into smaller segments that you can properly communicate with people, which in many businesses you don't. If your head's down developing some new software, you might usually pop up 1, 2, 3 months later. And in this type of campaign, you can't. So I found it actually brings a more disciplined, more frequent rhythm to our business and communication.
That's well said. I agree with you. I think that I found that too, that it does force a cadence. It does, and you do say, okay, we haven't had a win here for a while. Everything is going to be flat unless I can come up with a win, and so there's more pressure to come up with a win, and a win is good. The other thing too is that how you communicate. You got to think about your audience. You're not talking to venture guys. You're not talking to investment bankers. You're talking to people who are like regular Joes. So you You don't come up with, well, and if like I run my webinars by having a guest star, right? Like it's a talk show. And if you have the guy on and he's some kind of total geeked out scientist who, nobody can follow, you've got to be able to reinterpret all that stuff. But it's all about making it interesting and exciting and not just like blah, blah, blah. And here's another slide, and then more blah, blah, blah. I mean, because you get that and you are dead. You're not going to raise a freaking dime. You may have invented the light bulb, but if you can't make it exciting, nobody's going to give you a dime.
It has to resonate enough to where the audience can then be peer-to-peer marketers,
exactly.
regurgitate what you're saying. That's simple of a narrative, as Stephen was saying, with all of the updates. And it forces you to have that organization, that content calendar to say, we're going to talk about this week, that week. We're going to have some conferences to speak out, new partnerships, all of this momentum to showcase throughout so it doesn't get boring at any point. It pushes the audience to action.
Right. And the other way I would say that, Jason, and I agree completely with what Charles just said. I mean, it is good pressure. It's good that I have that focus, and that there's a real downside to me not producing some win or some new thing. But on the other hand, from the perspective of investors, that gives you this momentum. And crowdfunding is all about momentum. And so you're building that momentum through the storytelling, presenting the wins. And I think that's really invaluable.
And you can make things into wins that are just kind of like an announcement of whatever you're talking about. So like we're changing the name of our principal product because we couldn't trademark it. It's descriptive and you can't be descriptive and get it trademarked, right? And so how do you talk about it? You say, here, we've changed the name. That'll go nowhere. You'll get nothing, right? And as a matter of fact, some people go, well, your new name stinks, and here's all this stuff. Whereas you really want to say, here's why this is really cool and exciting, right? Here's some really interesting stuff. And so you write the thing and it becomes a thing about how the old name was constricting and the new name gives the real sense of how big this can be and yada, yada, you make it interesting and exciting. And you have to think about that with every bit of your communication. You don't go out and say, here's the simple answer, or here's the simple announcement. You've got to think you're talking to retail. You're talking to people who want to hear something fun and interesting, that they want to be entertained.
And the founder has to be a salesman. And most founders are, right? You're either selling your idea, you're selling your company or other. But I think in many cases, we're not always used to that continuous role, right? We fly out to see some investors, we have our hour presentation to some VCs, and you think the selling part's over, you put your other hat back on, you start, working on software, whatever. And this is really a very different rhythm of putting that on your calendar every day to think about, all right, what am I doing toward the investment community today? And I think that was a big shift I had to make in my own calendar.
Every day, having it planned in there, I'm going to go out there and supply the narrative, create the excitement, put a marketing angle to all the messaging. I want to talk about the early stage, because 50% of the issuers that we've tracked on King's Crowd don't surpass 75K. How were you able to get your audiences? How were you able to rally to sell your existing audiences, whether it's first degree networks, friends, family, customers, past acquaintances, employers, employees, partners? How were you able to get those initial individuals to back the campaign, to start creating that line around the block and move away from the empty restaurant sensation?
We just beat the drum on our side. We had 78,000 customers at that point registered on a site that we'd already served. We started there. I also made it a point to make some calls, frankly, to founders. And not only that's where I met Charles when I reached out and tried to get advice from him, which was great and frankly made a big difference in my thought process and campaign. But I also talked to a lot of founders who had failed campaigns and I wanted to know what went wrong. and what happened? What did they do wrong? What was the crisis? And it was a very interesting tone and tenor from both. And I think I learned a lot. But the beginning parts, it's hard, right? The first part, you get a flash in the pan, your friends and family, yourself, whoever else invest, and then you get this dead spot, and you're like, oh shit, now what, right? And then you continue to try to beat that drum, but you work through it. And I think that's where the tenacity at least came into my campaign. I don't know if you guys were different. Maybe you already had communities, John, with some of the stuff that you did with Sircles.
Yeah, we had a unique situation. I highly recommend it if you can make it happen. We have a media partner who believes in us, and we believe in him. We have a longer term relationship from our business I mentioned before, is our startup company that has multiple locations. We actually were doing tech service for him and got to talking about this app that we wanted to destroy Yelp with. And he said, oh, everyone hates Yelp. How can I be involved? He's got a really popular morning show radio program in Northern California called Rad Radio. He's a legend. So this cultivated over time. This is a long road. It might look like it happened instantly, because it kind of did in the public perception. When we went live with our messaging, we raised $1 million in a matter of days. But the preparation to lead to that was months and months and months and months. Planning the story, the narrative, how we're going to build trust and really seed the whole story from the beginning of when it goes to the public, was actually a lot of groundwork laid. And that's what worked for us. It's not the easiest thing in the world, because we've tried with other influencers, and I'll tell you what, it's super easy to get it wrong. Most influencers will get it wrong. You can't sit there and hold their hand and tell them what to say. But Rob is a legend. You know, he's a pro, and as some of you mentioned, he knows how to sell as well, and he believes in it. Obviously, like we believe in what we're doing. We're all invested, and that's key too. I would say, if you're going to have an influencer partner, if they're not invested, then what are they doing? They don't believe in you. There's something wrong there. They should be putting in a good amount of their own money. Otherwise, what are they selling? That's just talk. So for us, Rob is bought in financially and spiritually with us, and so that worked really well.
Tapping into those existing audiences, having dedicated partners, being able to bring more individuals, more traffic to the funnel accordingly.
Well, could I jump in here for a second, Jason?
Absolutely.
Great. Well, so because we're making a material, we don't really have a community. And so in trying to come up with the answer to that question, how do you launch, we decided to use publicity. And we went out to the media. We were able to give interviews, get quite a bit of attention in the popular press and in trade press, but we wanted it to coincide with the launch of the company. So we were able in the beginning, every week or two, to publish another interview or post a podcast or something that was third-party validation to what we were trying to do, and also got people excited. And the more we did that, the more media called us up. And so for a while there, we were getting a lot of free media quotes, which gave us that sense of, again, momentum. That to me is key in crowdfunding.
Did you have a PR firm to help you?
No, we did that ourselves. Because we have this very narrow niche, it's I don't think any media firm really could have understood what we were doing. And we had a pretty good idea of how we could leverage. I was constantly reading stories that people were writing about advanced materials, about problems to be solved, and I'd call them up just to tell them about graphene and what we were doing and why our graphene was different. So when that journalist in the future wrote another article, they would call us up for a quote. And so that worked for us. And that was really great. But there's no substitute for having your friends host cocktail parties and brunches on Sunday and go to them and speak to people. And we actually got our first manufacturing partner as a result of one of those meetings. And so it is just hard work and constantly going out there. And what Stephen was talking about before, never giving up. I mean, you just have to you have to know that 9 out of 10 times it's not going to result in anything, any money invested. So you're constantly looking for the one time when it would.
John, Charles, you guys use PR successfully? I know, PR has always been one of these things that's had a hit or miss, and mostly miss, at least in my history. Any of you guys use PR firms successfully?
No, but I'm going to have to. So, that's why I was asking, actually.
There are good ones out there. We commonly get inquiries from individuals who have a bad experience with a PR firm. It's a category of people that we talk to.
Yeah.
I really like how Brad pointed out, you can do this yourself. You are the expert, make it conversational, not just a pitch. And that way, if you are going to use a PR firm or have a consultant or someone internally reaching out, you already know what's resonating with the other side. Brad, Gilder Report, Harvard Angels, I mean, you constantly were building these partnerships, these relationships, made our job easier because now we have something to talk about in the ads. We drive a lot of traffic around it, something in the content, but you were successful and are all the way through in building those types of partnerships.
I think Brad's a great example of how you can do it on your own, and it's inspiring me. We sent out a couple press releases, and I'd like to adopt much more of Brad's strategy because you can't always just lean on one strategy, like Brad was saying, and I think everyone here agrees. We got to try lots of things, and not everything's going to work, but you got to keep hustling and keep pushing.
What percentage does everyone spend of their time on campaign? If you were to average out, obviously between launch and you have slow weeks, if you were to average it out, what percentage of your working time do you spend on campaigns?
I was like 100%. And when we're not in a campaign, a crowdfunding campaign, I spend 70% of my time looking for money. I mean, we were able to get a federal grant. We're now going after 4 more federal grants. I've got a great team around me who are doing the business of the company. But for sure, 70% just in any given week is looking for future financing opportunities, because we're trying to build the perceived value of the company, right? We're not publicly traded. I don't think any of us are. And so therefore, what we think what can defend the company's value at is what it is, right? It's the share price that you charge given the number of shares that are out there. And so my mission is to get the share. We started out at a $21 million pre-money valuation for our seed round. Then in the Series A, we were at 32 million. And the next Series B, if we have to do a Series B, which I hope we don't, we're going to be at 75 to 100 million. And in all of these things we're talking about build up that value of the company. And what DNA did obviously is a key part of that with this digital advertising, because that builds up your brand in the minds of the people who are going to be investing.
Yeah, and I think it is case by case. For us, if I didn't have to keep my hands in all the technical and engineering side of our business, I would be spending more time on the crowdfunding. I mean, I probably spend maybe 20-25%, but again, I have this fortunate formula and partnership that works that allows us to kind of go in sprints on the crowdfunding part and then go back to the business part of it. And there's with app development, it's endless bugs and endless tweaks and improvements. So I think I'm interested to hear what everyone else would say, because I imagine it's probably different for everyone.
I'm probably 30-40. And
yeah, I'm about in there with you, Charles. Depending on the week, sometimes it might be 5% for that week, whatever. I'm also heads down working on software, and we do a lot of deep development, but and some of that stuff's a little hard to break up, right? You just can't shift gears for an hour and think about your next update. Right. But yeah, it's a big chunk of time.
Big,
of course. And we're in a lot of hats. I mean, that's a significant amount of time on top of every other piece of running the business. And it differs from what some founders anticipate of, listing a deal. Maybe they're going to be live for 2-3 months, raise 5 million. I can't tell you how often I hear that. Could we talk a little bit more about the timeline? John, you were discussing how long it took to get the media partners ready, to prep everything for the round itself. What timeline what were your campaigns working off of, leading up to building the strategy, the campaign itself, post into the next round? Can we paint a bit of that picture for the audience?
For us, it was about 90 days in the beginning. By the time we put together the story, the marketing, find the right partners, get the audits, all that stuff done, was realistic for us.
That's fast. Did you get you actually were live within 90 days?
Yeah, about 90 days. Yeah.
Yeah.
So we started really January 1 in terms of prepping, and we launched April 1.
Very nice. Yeah, because just the SEC filings, all that stuff can take a couple months, audits and whatnot. I'd say to be safe, give yourself 6 months. And that's working hard. That's where you're more like 80, 90% on the crowdfunding. Once you get it going, for us at least, we can strategize in those sprints, and then we can, as long as we're keeping our updates flowing regularly, staying transparent, you have the drumbeat going. I use that term too. I can't remember who used it, but I use that drumbeat as that term as well. But if you're expecting to be able to do it in a couple of weeks, bad news.
Yeah, it ain't gonna happen.
Oh,
At least not well.
Right. Yeah. It takes,
And
what do they
most
say?
people have
98
longer campaigns too. So not just a month or 2 months, 6 months. Stephen,
that's what people don't
April of
get.
last year.
This is a 6 to 12 month commitment.
Yes.
Yeah.
Oh, for the raise, absolutely. Yeah, we've been at it a
After
year.
you start.
Yeah,
And
yeah.
that's for me 120 days or so. The Reg A is taking longer
Of course.
because you got to do this filing, and you wait for the SEC, and the amount of stuff is way more with a Reg A than a CF.
Well, now you're playing with the big boys, Charles.
Yeah,
That's
I
next
guess
level.
so, but yeah,
Yeah.
right. Well, not an IPO though. I got to tell you, at least not that.
What about the messaging? What messages resonated the most with audiences throughout your campaign? You're obviously A/B testing, looking at a lot of different variants each week, talking about something different. What really stuck? Where did you see spikes based on your announcements throughout the course of the raise?
Our most successful ads were never the ones we thought would work.
Hmm.
I don't know if you guys are the same, but every time we had a creative that we thought we're just going to kick ass with, and boy, this ad's going to do great, it didn't. And the one that we just kind of did randomly, we're like, wow, that's strange. And for us, maps always work. Any of the ads that we have a map on tend to work. You guys have the same experience?
That's
try that.
weird. Never had a
Proximity has
map.
power.
Maybe I'll give that a try. But yeah, no, I hear that a lot too. It's always the ad you expect is going to kill it, and then no one pays attention, and that's the one you thought was an afterthought, and that one's crushing it. I mean, for us, we have a villain, so it's going to be unique for everybody, but our villain's Yelp, and so we just hammer that. Like the title of our WeFunder campaign is the social recommendations app designed to destroy Yelp. And we just go right at them, and it's universal. Everyone hates Yelp, so it's like the door's wide open for that, and it works really well.
Our, for us, it was like, I mean, we have all these other ones that are created, and, I like the ones that DNA does for us. They're terrific. But the ones that they're always pushing me to do and always seem to get the most are, I hold up the thing and I talk into it, and I hardly even think about what I'm going to say before I do it. And it's 30, 40 seconds. And then I hand it off, and boom, suddenly that's selling better than anything. And it's like, they want to hear from the founder. They want to know what's going on. They want something quick, and
They want to see a map, I guess.
yeah, those work. Those work.
So-
I mean, they show you the thing on how the ads are doing.
Right.
Like same one, boom, 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 boom. Right.
Right. So for us, we'll talk about ads, and then we'll talk about other messaging, because I think I have a view that has two components to it. The first is with the ads, I think we found that our investors doing testimonials about why they invested was very effective.
Huh. I hadn't thought of that. It's a good idea.
The second is, and Abby and Khalil can correct me if I'm wrong, Jason, but I think that when we had hitting these thresholds, like when we hit like $3 million, that ad just blew the socks off of our fundraising. So when we did 3.5 million, we thought we'd do it again. And for some reason, the 3 million ad kept performing better than the 3.5 million ad, which didn't perform at all. So there's some psychological tipping point. That's what it suggests to me, is there's this tipping point where people say, wow, it's time for me to jump in. And the third thing was, whenever we got mentioned in the news media, we said, the New York Times calls, I'm just making this up, Avadain, revolutionary, right? In quotes. It's like when you do a theater review, it was really a horrible thing. The best thing I can say about it was they had good costumes, great costumes, right? Is the ad. Well, we were able to use that with the news media to amplify it. And so those were effective for me. But I think equally important was the way we were thinking about the company, things like unleashing the graphene revolution. We think that's what we're doing. And we shared that in our messages. And then we found that if we invited people in the ad to help be part of the graphene revolution, help launch the graphene revolution, that seemed to do well also for us.
Yeah, and it's also really important to have a mix. I think we all agree you can't just stick to one thing. Having DNA run social campaigns that support the media stuff you're doing, any other influencer. We actually do billboards, old school vinyl billboards, digital billboards, did some TV commercials. The more touches you get on the consumer, that's advertising 101. I think they say like you got to touch them at least 8 times before they even pay attention to what you're doing. So I think we just upped our budget to $1,000 a day in the last closing days of this campaign. And we're seeing the investments are churning like every few minutes, literally right now. And probably a lot of that's because there's people following the campaign that were on the fence for a long time. And there's that countdown timer, and the power of that countdown, I think we all know, can be very effective. And if you do it right, you can optimize those last few days and get maybe 50% of your campaign in the last few days.
And that's definitely a standout about your management style. Everyone on this call's direction of the campaign. You've scaled and found the right times, the right channels to push. And we're very, very aggressive in a safe way, but in an effective fashion. I think that's a big differentiator from other founders. How did you know, hey, now's the right time to scale? Were there specific metrics you guys were looking for? Was it just the timeline of the campaign? Hey, we're getting into closing, other factors of the environment. When, where, why did you scale?
Well, for us, the closing of the campaign is a major factor because you do have people watching. I think we have over 1,000 followers that have not invested. So, and then there's people that thought about investing, I'm sure, weeks ago and thought, I should do that. That's a good idea. My friend's doing that. I heard about that. But then we're busy and the world's noisy. So a little reminder of an ad that takes a few seconds and is a few pennies, but scaled and aggregated over thousands and thousands of views can get you a really nice return. And I think we're at 20-something% return on our investment. It's pretty remarkable. But a lot of that has to do with the messaging and the timing.
Yeah, the timing is everything, right? You do a lot in the beginning, you do a lot at the end. And, at the end of our last one, I think we bumped it to a couple thousand a day, because it was working. So,
Right.
You got to get there. Oh my God, it's going to close. You're going to lose out. This is, the FOMO thing is huge in crowdfunding, right? I mean, if you really don't think you're if you really think you're losing out, that's the time you want to get going.
Brad, I know you were very good at that as well, and it was a longer path than many Reg CF founders anticipate. I believe it took you about 50% to hit the first million, another 25% to hit the second. There was questions about where it would go from there. Another 1/8 of the time for the third million. And then in the last few weeks, she did another 1.5, all from effectively looking at what's working and doing more of that. Could you talk a bit more about the thought process, and anyone wants to add on top of that as well?
Sure. We definitely have a different trajectory than most CF campaigns. Ours was very, very predictable growth curve, but it was very slow. And I think the reason for that is that they're investing in material science. And for the average retail investor to do that, you know, there's a lot of uncertainty, a lot of hesitancy, and most especially waiting on the sideline before they jump in. And so so the messaging was really always aimed at trying to get people to jump in. And we were still pitching angel groups at the same time that we did this. And what we wound up understanding was that we had 117 investors who invested 6,000 or more, and that accounted for 2/3 of all of our revenue. So we had over 2,000 investors. 117 accounted for 2/3 of the dollars invested.
Some version of the 80-20 is always
right. But
how did you leverage that? What did that tell you?
Well, what it told us was that we used these bigger investors as validation for the people who liked what we were doing but were hesitant. And
angel groups always are hesitant, always are looking for like, well, you know, if you did this, if Kleiner Perkins comes in and Greylock, we might consider possibly putting in another $10,000. Okay. But that's no guarantee. Okay. And it's like stuff like that. I mean, I don't know. I've never gotten a dime out of any of them. I've raised a lot of money and none of them have ever done anything. They like to have meetings and talk.
Well, we were fortunate. We had a different experience. When I was pitching, what would happen is, of course, most of the angel groups get into a big muddle, but I could pick off one or two who would individually invest in the CF round.
I can see that. Right.
And then we got the Harvard Business School angels, the Boston chapter, to invest in us, and they then gave us a global syndication to Harvard Business School alumni. And believe it or not, I always say they invested $1 million. And I was just coming from a meeting at Southwest in San Antonio, and turns out it was $984,000 they invested. But they invested most of it through crowdfunding.
There you go. Right.
And we've done a bit of that too, by the way. You know, interested angels, we steer them toward the crowdfunding round.
Exactly.
Because it just continues to bring some of the momentum and allows that to continue to grow. And I think it's a good mechanism. You know, I'm curious on if any of you guys have done the analysis on how many of your investors have invested more than once.
Yeah, we did that. We have I don't recall the statistic, but it struck me as a very high number. But a lot of them would be investing $100 in the first crowdfunding round, and then they invest $300 in the second round. But we have a lot of investors who do multiple investments.
Yeah, I think ours is just under like 18% or 16%, which I thought was pretty cool. And it again shows us and who we need to market to, and that just because someone's made an investment of whatever $1,000 doesn't mean they're not going to come back for $5,000 later when your story just resonates a bit more. So I think it's something that may be forgotten from a lot of folks when they get in, that your existing investors are also a great pool for additional capital.
We typically see 10 to 30% in the advertising reports. We can isolate unique investments and see how many individuals, and it's typically somewhere in that range. And yes, Stephen, marketing to your investors Maybe we could talk about that for a second. We've seen all types of value come out of that. If it's not a repeat investment, I mentioned earlier peer-to-peer marketing, but what other benefits have you guys seen from your investor community? Have you seen press opportunities, partnership opportunities? I've heard about franchisee and merger acquisition discussions come out of it. What other types of benefits have you seen from your investor base?
I'm actually surprised how quiet they've been.
Okay.
I email all of our investors, let them know what's going on. And I expected like a deluge of issues, questions. I'm like, my God, I'm imagining a cap table of 1,000 investors. What's this going to go like? And I don't know if you guys have had the same experience, but they've been actually fabulous. I've had some intelligent questions come in from a handful, and frankly, the rest of them are along for the ride and happy. So I was a bit surprised.
Yeah,
I mean, you got some guys that are very active, right? Always
Yep.
coming back and wanting more, especially in discussion area, and we're very active. The most part, most people just want to sit back and
Make money.
enjoy the ride, right? Make
But
money
Steve,
on it.
to Jason's question, if I feel like if you want to get something out of them, and to your point, Stephen, they're probably not going to volunteer necessarily actively, but if you just knock on the door or give a call and say, hey, we're doing a collab, we would like you to post on your social media, and we'll post on our social media. We'll come to your restaurant. We'll take videos of your food, and we'll say some nice things about your establishment, and then how so many people are finding it on our app. Everyone's really willing, especially because they're invested, right? So I think it is a great opportunity if you do go in a proactive way and hit up the people that invest in you. They're your biggest supporters, and some of them have huge followings. And so we've had some really tremendous collaborations through other social media, just through our local investors and their local businesses.
Again, for us, we have a different kind of a business, but we have potential customers for our graphene flakes who come to us because of our network of people and because of the digital advertising that we've done. We actually have zero money for sales and marketing. We absolutely have no line item for that because the people have come to us as a result of the word being spread, both through the investment community and through the digital advertising. And for us, that's been one of the great unintended consequences of pursuing the CF campaign, is making a very broad audience aware of what we're doing.
I think that's a great point, Brad, that I think applies to every crowdfunding campaign. Your greatest customers are your investors, and you're going to gain tons of users of your app or customers for your product or purchasers of your material, whatever the case may be, if you have them invested. And so it almost doesn't matter which is more successful, your business or the crowdfunding campaign, because they kind of go in lockstep with each other, and they're both equally important and they drive each other.
I agree with that.
Yeah, I think so. I don't know how many investors. I think we have 3,600 investors now, I think it is. And then at the moment, I don't know how many is. We've got this reservation page up, and there's probably going to be another 1,000 at least. I think that out of all those, and the people that they know that they've talked to, and the people that see their T-shirts and hats and stuff, those are going to include a number of people, that maybe the average guy is not going to be, deploying our software, our deep tech software, but they may know somebody. And some of the people, a lot of the people I know who have invested are pretty sophisticated software engineer types who really understand it in depth. And there's no doubt that they probably already have had and will have more discussions with places they work. If they worked at AT&T, they worked at whatever, Ericsson, someplace, and they say, hey, look at this thing. And that kind of thing can be really, really impactful. And I'm sure there's a lot of ripple effect that we don't even know where it's coming from. And I know it happens. It's out there a lot, but where did this originate? I don't know.
Yep.
Stone was thrown in the water in the other end of the lake.
What do they say? I know I'm wasting half of my advertising dollars. I just don't know what half.
Just don't know which half. And
Right. Yeah,
But the
Yeah, the classic
ripple
adage.
effect, yeah, lots of ripple effects, definitely. And you can't quantify them necessarily, but you know they're happening. And the more noise you make, the more ripple you get.
You guys mentioned earlier not giving up, and that's a commonality among you gentlemen. I think a lot of founders get stuck there. Only 10% of campaigns get above about 643K. Only 7% surpass the $1 million mark in 2023. What specific actions did you guys take to successfully reinvigorate the audience and momentum? How did you utilize feedback during those slower periods? And we've all seen them to lift things back up and not focus on, hey, it's not working this week, we're just going to shut it down. Obviously, it panned out for you, and you had much stronger stages later that showed a return that covered everything. So what strategies could the audience implement to keep their team motivated, focused during those tougher periods of the raise?
You know, on our side, I'd love to say it's a strategy. It's just tenacity. And it's frankly irritation. When we go 2, 3 days, if we didn't see the investment we want in those days, I get irritated. And I'm like, all right, we got to fix this. And then you start focusing more. And sometimes it's just because, look, again, we have businesses to run, right? So maybe the last 2 weeks you hadn't done as much refresh or something as you should have done. So now you got to start stepping on the gas pedal again. So it really is doing that. And early on in the campaign too, I invested in my own campaign. When I saw a dead day where I didn't get much, I put some money in. And you know, when they ask you to, you know, you have to disclose that when you do, I was proud of it because every one of our employees invested. I've invested multiple times. And if I'm not willing to put my own capital to it, why should somebody else? So I think it's really, I think that's been a big piece to it. I don't know if you guys have had the same experience, but it's really just, you know, just grinding it out like any other part of a startup.
Absolutely. Yeah. There's no quit in it. And if you have a slowdown, I mean, there's plenty of other things to do. But for us, hitting milestones and then being able to talk about it and re-engage with our audience, being fully transparent, not just about the good things that are going on, but the bad things too, because every business has challenges. And I think the audience connects with that. I think that's what makes it so attractive to small investors. They get a direct line to a CEO or CTO, COO, and that transparency goes a long way and rekindles.
Yep, and you, if you go through this thing and you get too easily discouraged, or you're sitting back and waiting for things to happen, well, you know, you're going to wait a long time, and you're going to be part of that 75K pop out guy that is half of the whole freaking crowdfunding last year, right? I mean,
And you probably shouldn't be a founder.
nope.
Right.
Probably
Exactly.
wrong. That's very good, Steve, but I agree with you. You
Because
know,
it's not as sexy as it looks, man. It's grinding it out.
they are
That's a fact.
selling all the time, and you're saying, okay, this sucks this week. This really sucks, and now I've got to do this, and nothing is happening. And what do I have to do? And then you just do it again, and then you do it again, and then you do it again, and then the next week you do it again, and it's like it never. It's a totally different conversation than when you're talking institutional investors. It's a totally different sort of like dynamic in terms of how the money comes in. It's a totally new paradigm, really, for raising money compared to anything that has historically been the case. You know, it's sort of more related to how it would work raising money from angels that kind of dribbles in over time a lot of times. But, you know, what you really have to think about is, how well am I communicating here? And how well am I engaging? And then set, and you're going to get lots of positive and negative reinforcement, especially negative. But you know, you go out, you try something. It's like you were saying before, you know, like you try these ads and you'd like, this ad should have worked, you know, and it didn't. Why not? You know, and it's like, but this other ad doesn't make any sense, but it did work. And it's like, there's all sorts of feedback that's going on all the time. And you keep adjusting, you keep changing, and you keep coming up with something else and everything. And not only that, you come up with a perfect ad. That's it. That ad's done. Now you got to come up with another perfect ad that's completely different, or post or whatever it is you're doing. It's an interesting and very creative thing. It's a long road, And nobody should go into this thinking, okay, I go into this, I get in, I do my marketing, then a couple of months later, I'm done, and then I can move on and run the business. That's not the deal. This is part of your business. This is how you operate the business. And that's it.
Yep, the creativity part of it is a major component. You got to put your creative hat on and keep coming up with new angles, try new things. It can be a total departure from the business operation and what you're trying to build with your team, but it's necessary, and you got to be prepared to do it, and you got to put your heart into it.
Yep. I think it's a good thing too. Sorry, Jason, 1 second. But I think it's a good thing too to be constantly trying to translate what you're doing into terms that is interesting for
An
anybody
average
to
person
understand.
outside of your industry. Totally agree.
Yeah, I mean, it forces you. It's like when you sit down and create a PowerPoint, you know, the first thing you do is you write out too many words, and then you go back and hack out half of them. Then you do it and hack out another half, you know, because you've got to think about things differently, and you got to communicate really clearly, and it has to be interesting. It can't be just like, okay, I told them everything they needed to know.
Yeah,
Sorry,
interesting and concise.
And interesting.
Yeah,
Engaging.
it's got to be both, exactly. It's hard to do that in a small form, but if you can't do it, they don't see it. It's like putting too many words on a billboard. They just drive right by, they see nothing.
Wrong, right, gone.
And most of us aren't used to being entertainers. And in many ways, that's one of the things that resonated with me when I talked to you early on, Charles, before I did my campaign. You're like, look, you got to end up kind of being an entertainer, which ultimately just means engaging, right? It just means being able to engage someone who's not an expert in your industry and tell them why what you're doing is cool.
Yeah, exactly, Stephen, right.
Yeah.
Priceless.
You can talk now, Jason.
We'll hand you the
We're at
webinar
top of
back.
the hour. Just wanted to wrap it up and explain. And these are invaluable insights. You're hearing it directly here from the leaders who are doing it the best. And it's in a space that could see higher success rates. So I want to thank you guys so much for taking the time from your busy schedules to be able to do this on top of your fundraising efforts and everything that is going on, to be able to provide this thought leadership. Big appreciation from DNA for taking the time to do this. I know the listeners, the viewers are taking notes and are going to be applying these recommendations today directly after the roundtable. So thank you again.
Thanks,
Yeah.
Jason. Always
Great.
fun to hang
Thanks,
out with
Jason.
awesome
Thanks for
founders.
having us.
Yeah, thanks,
Excellent.
guys.
And we'll have
Thank you.
some links below. Make sure to check out everyone's campaign on Start Engine for Charles and Stephen, on WeFunder for John, and you can look at the past campaign and message boards for Brad on Net Capital.
Bye, everyone.
Bye,
Thanks,
everyone.
everybody.
Thank you.
Thanks. Take care.
Awesome.